Let's wait 1 or 2 minutes to give some time to other participants to join. For Africa Partnership Coordinator, and it is my honor to welcome you to this webinar on behalf of our partners, Global Centers on Adaptation, UNEP FI, the African Development Bank, and the AFAC initiative. This is the fourth part of a webinar series that we started a few months ago with the different partners I just mentioned, with the objective of raising awareness around climate change and the risk and the opportunities of the African financial sector. During the previous webinars, we acknowledged the emergency for Africa to adapt quickly to the worsening effect of climate change. We also acknowledge the importance of the African financial sector to support this adaptation and the transition of Africa by mitigating the risk, but most importantly, by seizing the different investment opportunities. And we also, during the previous webinar, introduced you the AFAC initiative. We will discuss a bit more about it later on. And after previous focus on the banking industry and the insurance industry, this webinar today will discuss the opportunities and challenges in sustainable finance for the African capital markets. During this webinar, we will explore how African capital markets can promote green and social and sustainable finance and how they can play a role in addressing climate change in Africa. We will also highlight existing initiatives on the continent from different capital market sectors. So if we can move to the next slide, please. I will just remind you before we start some housekeeping rules. So we will be together for an hour and a half, and you are all muted, and we will ask you to remain muted for the entire webinar. During the Q&A session, you will have the opportunity to ask your questions. You will also have the opportunity to submit your question via the Q&A button. And also note that please, the webinar is available in French and in English. If you want to switch language, you can use the interpretation or translation button on your platform. The slide and the recording of the presentation will be shared with you within 72 hours after the webinar, and they will also be available on our website, which you can see the name on the slide. If you have any technical issue, please you can contact the organizer of the webinar. And at the end of the webinar, a questionnaire will automatically appear on your screen. Please take the time to complete it. Now, if we move to the next slide, just to give you the flavor of the webinar. So after this introduction remarks, I will leave the floor to Mr. Olumide Lala. We will give you a presentation around the capital markets and climate action. And then we will have a panel discussion with different panelists we will introduce later. And of course, we will give you the opportunity to react to the presentation and also the panel session by asking questions. Please note that you can already ask your question via the Q&A button during even before the Q&A session, and we will answer them during the Q&A session. So before we start with the presentation, I will give the floor to David Ashabor from the African Development Bank to also give some welcoming remarks and tell us more about the AFAC initiative. Thank you. Over to you, David.
Yeah, thank you, Marina, and thank you, participants, for joining this webinar. I just wanted to take a couple of minutes to speak to the work that we're doing at the bank with our partners around the African Financial Alliance for Climate Change, or AFAC. I know there are a couple of slides on AFAC in the presentation coming up, so I'll be brief. Essentially, what we're trying to do with AFAC is to convene a platform for the African financial sector to identify and discuss, the risks and opportunities around climate change. We are aiming to build a platform which is stakeholder-owned and stakeholder-led. As I say, Olumide in his presentation will speak more to the the work streams of AFAC. But essentially, we are very keen to increase our engagement with the African financial sector around climate change, because we believe that the African financial sector, including capital markets, have a critical role to play in Africa's response to this global challenge. We believe that the challenges are at many levels, global and international. And our intention with AFAC really is to meet the African financial sector at its point of need. So I would encourage you not only to treat this webinar as a learning experience for you, but also for us in terms of letting us know what are the issues you're struggling with, or you think you need support. And we will so that we can sort of integrate this in the work we're doing around AFAC. If anyone would like more information about AFAC, I will put my contacts in the chat, and feel free to reach out. So with that, I think I'll leave it there, and I'll hand you over to Marina. Is it back to you or straight to Olumide?
Sorry, we can go straight to Olumide for the presentation.
All right,
Thank you, David.
Olumide, over to you. Thanks. Bye.
Thank you very much, David, and thank you very much, Marina. As both Marina and David actually alluded to, today we'll try and discuss three things, really, or three or four things. One, which will be climate change, its effects on the markets, our way of life. Also, we'll look at what sort of regulations, if any, actually guiding the flow of capital. We'll also look at what sort of capital is actually being deployed, what the capital markets can do about this, and what they should be doing about this. And also, if you will, David alluded to AFAC and what it is that collectively, using the AFAC platform, we can actually do to mobilize more capital for climate action in Africa. So I'll just go to my slides right now. And if I could just share my slides, just give me a second, please. I assume you can only see my slides. So capital markets and climate action in Africa. How African capital markets can promote green, social, and sustainable finance, and what role, if any, actually they should be playing in addressing climate change in Africa. I guess if you were to look at the news reports on TV and media and social medias and the likes, all you probably see is burning bushes out in Spain, Greece, Californian fires, hurricanes around Europe. But, you know, you don't often hear too much about what's actually going on the continent and how that's impacting not just livelihoods, but also monies that have been actually put at risk by investors to promote commerce and economic development. Now, where did this all start? I'm not going to bore you with climate change. We all know climate change is real. We talk about rising sea levels. We talk about droughts, extended desertification of parts of our continent, and how that's impacting our food security, how it's impacting immigration and national security, how it's actually beginning to impact some of the capital that we put at risk in terms of investment and all of that stuff. So, you know, to that extent, as we just part a graph very quickly to remind us of, you know, where all this conversation started from, which is the Paris Agreement, which was signed at COP21 in 2015. And the trajectory basically thus far is literally to develop, have countries develop their NDAs, which is national determined contributions. These are actions that they will take to mitigate against the effects of an impact of climate change globally, as well as in country. And literally, we've got this direction of travel towards 2050, where we're all trying to be climate resilient and effectively net zero emissions. Now, as I said, this is a legally binding international treaty which has been signed on climate change, and 196 countries signed up to it at that point, and most of the countries in Africa right now, if not all, are actually signed up to this. And the essence is actually to limit global warming and the increase in temperatures, preferably to 1.5, but certainly at 2 degrees pre-industrial levels. So what does that actually mean in terms of where the international landscape is going? Effectively, where previously we've been having voluntary type disclosure requirements or guidelines, they're increasingly becoming mandatory. And by default, the flow of capital as well, is actually following that. So literally, because these requirements are actually becoming mandatory, it is now imperative that people begin to report against where they invest their money. And when I say people, I'm talking about institutional investors, I'm talking about financial institutions, I'm talking about development financial agencies, the entire gambit of the capital, not just the capital market, but the financial sector. Now, for this to actually happen effectively, what you're having is that the ESG, the environment, sustainability, and governance ecosystem is getting more integrated and data hungry. Why is it data hungry? Because for you to prove what you say you're doing, to ensure that you're not literally saying that you are investing in green, but not doing so, which we refer to as greenwashing, you've got to be able to prove this over and over. You're being required now to do so more often than not in order for you to actually get more investments flowing in that direction. So, and we've got standards that are coming up, guided, globally recognized, some of which are mentioned here. Obviously we've got some of the IFC assessment standards. We've got PCAF, we've got PACTA, which is the Paris Agreement Capital Transition Assessment Framework. Increasingly, things are beginning to become science-based targets now. So not where in the past you were required to just give the information, now it's actually being tested, because you've got to prove that we are actually reducing the impact of climate change. And so what are investors doing? How are they responding to all of this? Because clearly they're the ones with the money. They're the ones, the institutional investors are the ones placing money at risk, and they're the ones who actually have to look at their portfolio. And they have to look at their portfolio for 2 reasons. The first one is to actually look at where are the opportunities in the green space? Where can we put money to actually get that alpha we're looking for? But at the same time, they have to be cognizant of where the risk is within the portfolio. The securities they carry, the companies they invest in, the project they invest in, how susceptible to climate risk are they? So literally, they're actually addressing this, in various ways. One of which is actually assessing the portfolio. And by that, I mean, the total collective of the investment which they have for, to assess it against the level of carbon exposure, and more importantly, transition preparedness. Now, what do we mean by transition? There are 2 types of risk when we talk about climate risk. The first one, obviously, is the physical risk that we all know about, which is obviously, hurricanes, droughts, and all the physical nature that the environment throws at us. But as we go forward, there are a number of things that are actually changing. Regulation is changing, technology is changing, customer preferences are changing. All of those things obviously begin to create some level of risk for those who actually invest in money, because you don't want to invest in an asset that nobody wants to buy, because clearly you're going to lose your money. You don't want to invest in a security, and they need to be cognizant also about where the security or collateral is actually located. So if you lend money and you take collateral, that asset, where is it located? What are the potential impacts of climate change on that security that you've taken for that loan? So literally, there's a further assessment, to the extent which these portfolios are exposed to climate transition, and the degree to which the underlying companies which they've invested in are actually climate aligned. Also, having done this, Now, given this scale, yeah, of climate, the impacts of climate change, and you know, we're discovering new things every single day. The data you had last year, it's literally none of what because things are changing very quickly. As you can see, as I said earlier on, all you have to do is put on your television, switch on your television, and you see the impacts all around you. Most of Southern Europe right now is actually in flames. These are things that we never experienced before. The same thing goes for Africa. The level of the temperature is going up every single year, and those have implications. Implications not just in our food security, as I said, but even our ability to live in certain places. Water resources, for instance, are drying up. So people are having to move en masse to new areas that are more conducive to the way of life. So portfolio managers obviously are taking this into consideration, and I begin to look at, you know, the value at risk, yeah, of the companies within their portfolio. And literally, they're having to do this against climate scenarios, which some they know, some they don't know, some they don't even have data for. So literally, you're asking someone to price the value at risk, yeah, of a portfolio based on scenarios that they haven't actually got the knowledge or experience to do. So pretty much difficult, but it's something that needs to be done, and they're actually doing that. And why are they doing this? Literally, they've got to identify, increasingly identify those companies that face significant risk to climate change, so that they can actually swap that out of their portfolio for low emitting. And one of those instruments, and we'll discuss much later, are things like green bonds. And finally, it's not just enough to just shift out of these companies they've got to intentionally direct capital towards companies with climate solutions. And that also includes exploring extensively adaptation investments to balance out all this renewable techs, which obviously speaks to mitigation. And the reason why that's important is that on the continent of Africa, Africa, as we know, is a low emitting, relative to global emissions level. We probably account for about, 5-6% of global emissions, if that. But we are the ones who are being impacted the most. So we need to learn to adapt more, and investment needs to go into some of this adaptation-focused investment opportunities. Now, I spoke to green bonds earlier, and just to give you, what this is all about. Green bonds literally are bonds instrument, as you would normal bonds. But the main difference is that these are bonds that are created specifically to fund projects with positive environmental and climate benefits. That's literally where the difference is. And over the years, in the last 15 years, there's been a bit of a trajectory. And there's a map there very quickly. Obviously, the first green bond issued in 2007. The company called Climate Bonds Initiative came up with a certification, a framework that was used to certify the first green bond in 2014. In 2015, the market obviously took a spike, and moving quickly to 2016 when the first sovereign green bond was issued. But what is actually pertinent to us in Africa is that the first sovereign green bond was issued by Nigeria in 2017. Now, sadly, we've only had two since then. And that was important because it was the only one that so far, that was the first one that was certified against the green bond standard, to show you the level of rigor that we had to go to do that. Yeah. So it only tells us that it is possible, but obviously we need to invest in data to ensure that we're able to get that. What is more interesting, however, is that as at 2020, the green bonds market, which started in 2017 with just a single issuance of $1 billion, has now crossed $1 trillion, and as of today, standing at something like 1.9 going on $2 trillion. Now, why is that statistics important? What it speaks to is that effectively green bonds are important, and using capital markets to actually fund that is also something which we need to look at. Reason being, obviously, the capital markets is where we mobilize a lot of funds for this. And typically, speaking about what type of bonds are there, as I said earlier, green bonds are used to fund green assets, And how do you basically measure that? It's actually the use of proceeds, what you use it for. That's what determines it to the green. Yeah. So it's either the use of funds or asset-linked bonds, and the proceeds directly to green. Now, there are other flavors since green bonds were established, because social bonds effectively are used to develop the proceeds from sovereign social bonds are allocated to projects with a focus on delivering positive social outcomes. And that could be in education, it could be in health, it could be in some sort of youth empowerment. Basically, not as is with green bonds, where it is focused on environment or climate, but these are more social stuff. And these are opportunities which, are picked up within the market. Other type of bonds which we look at and have been issued very recently, either on the corporate side or even sovereign, is the gender bonds. And these are social bonds, but with a focus on gender businesses, gender opportunities, gender activities. And finally, we have one called the sustainability bond, which is literally focused on the SDGs, the Sustainable Development Goals, but more or less is a combination, if you will, of both social as well as environmental benefits. Now, since then, we've now gone and looked at other types of bonds, which typically we can look at here. Green sukuks, obviously, for those who understand what sukuk is all about, they're green bonds, but obviously with a Sharia compliant requirement. Resilient bonds are interesting ones because, as I said to you earlier on, obviously we're talking about catastrophes that tend to happen. We had a couple of years ago, last year it was, where we had the not the hurricane now, the disaster out in the typhoon. That's it, the typhoon out in Mozambique, which obviously affected Malawi as well. We had a couple of years ago where we had some locusts attacking farms in Kenya, and we have all of this across. So there's a need to build resilience, especially within the agriculture sector, more so than any. And so some of these bonds are useful. Transition bonds is an interesting one, which obviously is come up more recently. And that's extended to more diverse sectors, beyond the energy sectors. These are more polluting type sectors like cement, your cement and the likes. And it's about trying to get people to do more of the right thing by placing a certain type of KPIs on them. But the one that I think we could be looking at more often in Africa is the sustainability linked bonds. And these are general use bonds, not specific to use of proceeds, but basically it's getting organizations to commit to achieving sustainability related improvements over time against predefined targets and KPIs. And I think in an environment where it's difficult to gather data, these are obviously some of the things that we need to potentially look at. So without spending too much time on this, these are perhaps some of the eligible activities that would qualify for green investment from the ones that I've shared with you earlier. And that speaks to, obviously, on the mitigation side, typically energy efficiency, clean transportation, green buildings. These are areas where you can measure very effectively the impact and gather enough data to substantiate your contribution to reducing emissions. But on the flip side of that, obviously, as I said earlier, in terms of where we sit in Africa, adaptation, you got agriculture, water resources, as I said, is obviously been a major issue. Industry is another place, and obviously land conservation and restoration, and of course, resilient infrastructure. Those are areas where mitigation opportunities, and of course, tourism for some of our countries, where we can deploy capital. So why do we need to focus on capital markets? Why do we need, what are the advantages of a well-developed capital market? A vibrant capital market obviously brings significant developmental opportunities. It enables large pools and diverse pools to participate in the wealth creation for domestic institutions and real investors. They come with certain structures that give confidence to customers, and so people are willing to obviously invest in it. It gives the not just domestic but even international investors. It gives them the confidence, and of course, the green bonds is a good start because people are quite familiar with that. So actually raising those type of bonds on the market is something that investors actually are quite interested in, looking forward to. And of course, capital markets, as I say, is a sustainable avenue for structure that use credit enhancements, guarantees, concessional rates, subsidized technical support that we can structure to enhance the opportunities for investors and those willing to raise bonds, raise capital on the market. And finally, the bond market obviously can be efficiently facilitate investment by large and diverse pools of capital. And this is important because obviously we can scale this towards environmental benefits and the overall shift towards the green economy, which obviously is the main objective of what we're here. Very quickly, the market, as I said, has grown very quickly. It's projected to grow even further. But the worrisome for us is that despite all the opportunities in Africa, we don't seem to be raising enough funds. As I said earlier, the only two sovereigns that have issued green bonds in Africa, Nigeria and Seychelles. The opportunity is there. What can we do about this? We need to move the dial in the right direction. This is just an example, and you will get this in the slides, of some of the companies that have actually issued bonds over the last few years. But the market faces certain challenges. Limited ESG data for reporting, especially data quality, availability, very limited. Regulatory environment and governance issues, quite inconsistent and weak regulatory frameworks across most of the African capital markets. Risk perception, especially country-specific risk. Investors perceive certain markets to be more risky than the other and are quite, volatile. So naturally, the appetite for this is very low. Lack of standardization and reporting guidelines. These are things that could be addressed, as we say, much later through AFAC, the AFAC platform, and ideally collectively. And finally, there's a limited expertise as well as capacity within our African markets. So, there's a need for sharing our experience, expertise. Some markets are more developed than others. We're hoping that through the AFAC platform, collectively, we can share more of this. And of course, there's always the risk of greenwashing. And as I said earlier on, data is important when it comes to the level of integrity that you have to demonstrate. So that's one of the things which AFAC is looking to promote and advocate for. So I've spoken about AFAC. AFAC obviously is the African Financial Alliance Against Climate Change, as David had alluded to earlier. What's the long-term goal? Simply to make African financial sector more resilient to climate risk. Now, they've developed a theory of change around this, and literally, the impact we're looking for is to increase the limited resilience, increase climate resilience of financial sectors, because obviously the more resilient they are, the more stable they are, the more they're able to mobilize funds, the more they're able to deploy the funds. But that also means that we need to enhance investment to drive low carbon opportunities and finance low carbon opportunities. Literally, in developing that pathway, the outcomes we're looking for is ensuring that financial systems are more aware of the climate risks for each of their economies. Because unless they're aware of this, it becomes a problem to actually manage it. You can't manage what you don't know. And financial system actors need to have access to comprehensive data to understand climate vulnerability in being able to manage that. But driving all of that is creating an enabling environment, which also includes policies, either from government or from regulators, to actually ensure that we mainstream financial operations and climate risk is understood within that. The financial actors themselves, they need to be adequately trained to understand and evaluate and assess the risk when they see it. so that they can actually make the right decision. But the ultimate objective here is to be able to mobilize more funds locally in country towards sustainable development. And literally, that's the essence of the strategy here. Now, clearly, there are global policies, there are global frameworks that needs to be understood, TCFD, TNFD, all of those stuff within the regulatory framework. And there are a number of training opportunities that need to be developed for us to build capacity. But ultimately, we need to build structures that allows climate and natural related risk, financial risk, to be integrated into the policy and investment decision-making process within the countries. And that could potentially mean ultimately developing taxonomies that are more fit for purpose. It could mean actually educating people on the benefits of existing taxonomies and how that can relate to managing the investments that you have. Ultimately, where we're heading from AFAC's perspective is to create a level of leadership and awareness where financial actors and policymakers are actually aware of not just the risk, but how do you turn those risks into opportunities for the economy, various economies across Africa? How do we develop data-rich portals where people can actually get the right information, comprehensive information to understand and compare climate-related data across and standardize that information? But the idea, as I said earlier on, is obviously enabling policy environments to ensure that climate-related risk management is mainstreamed in financial operations. That strengthens the financial operation, not just for the countries themselves, but across Africa. And what that also begins to do is drive opportunities and investment, not just in country, but also inter-country as well. The essence, obviously, is how do you manage that risk? Very important. You've got to be able to manage the risk. And in managing the risk, you attract more funds, and the dire statistics, which I showed earlier, which says that, Africa is still not mobilizing enough. I mean, I think we've mobilized the best part of, 6 billion or less, when you compare that to the global volume of over $2 trillion, which is just ridiculous in terms of the type of opportunities that we have in the continent. To debate some of this, which I've just spoken about, I will open up about 5 minutes for questions, but to debate some of the items I've spoken about in terms of the risks, how we intend to manage that, how we intend to turn those risks into opportunities, how we intend to use that to mobilize funds, not just inside the continent, but more so attract foreign direct investment into long-term infrastructure, sustainable infrastructure, to create necessary jobs for the youth, which is about 65% of our population in Africa, to ensure that infrastructure is put in place to reduce energy poverty, to improve our food security, to enhance our water resources, and all of that infrastructure that we talked about. I will bring on a panel to discuss this with me. And just before I open up, in fact, before I bring them on, I will open up the session for 5 minutes for questions. Thank you.
Olumide, sorry, if I may, I think maybe it's better to have the panel session and then we will have a general Q&A session.
Not a problem. So,
thank you.
As I said earlier on, coming to debate and discuss and throw some more light on some of the things that discussed in my presentation, I have what I might say I'm extremely privileged, actually, because the panel that I have today to discuss this senior, seasoned individuals in their own field, starting with Mr. Jude Chiemeka, who is the divisional head capital markets at the Nigerian Exchange Limited. Mr. Chiemeka, you're welcome. Ms. Constantine Kandier, who is the Executive Director, East Africa at Media Advisors, and also the founder of Kenya Pension Funds Investment Consortium, and a certified pension trustee for the last 9 years. I also have with me Ms. Mtumboi Mundia, Director, Market Supervision and Development at the Zambia SEC. That's the Securities and Exchange Commission in Zambia. And finally, Mrs. Akene Zupo, who is the Chief Capital Markets Officer at the African Development Bank. I welcome you all. Thank you very much for joining. I shall stop sharing at this point. Thank you very much for joining this meeting today. We have spoken about climate change. There are a number of clear issues that we've been dealing with, and certainly a lot of this has been, these are areas where we have been looking to resolve. So without further ado, maybe I'll call Mr. Chiomeka to just tell me some of the things which Nigeria, as I said earlier, was the first to issue a green bond, certified green bond in 2017. They also issued a second green bond in 2019. And in between that, we had two or three high profile corporate issuance, Access Bank, North-South Power. In fact, I think North-South Power has come to market twice. But seems to have been gone a bit quiet since. Perhaps you can tell us what the Nigerian Exchange Limited is doing to promote green and sustainable bonds issuance on the markets in Nigeria, please. Thank you.
All right, thank you very much, Olumide. Let me start by thanking AfDB and the partners for inviting the exchange to this event. We are very thankful for the leadership that AfDB continues to exhibit in this particular area. Obviously, they were the first to issue their AAA $500 million green bonds in 2013 that led to the issuance of the first sovereign green bond by 2017 by Nigeria, which was like $30 million at the time. And that led to the issuance of the corporate. The first corporate was about $24 million. In all, depending on the exchange rate you're using, the time they were issued, we're talking about a market of about $144 million. And that in itself has led to a whole lot of things. First, a lot of capacity building within the domestic environment. There were some challenges, which obviously have been to a large extent reduced in terms of the whole process of issuing a green bond, having to rely on the certifiers that obviously were international with the cost of the exchange. That made the whole issuance process very expensive. But now we do have a domestic verifier, and that to a large extent has improved. And you've said something about the capacity. It continues to be a challenge in the domestic environment. And working with AfDB as well as IFC, we've done a lot of capacity initiatives in domestic markets. On the back of that, we're seeing Lagos State working on their first tranche of green bond issuance, and other corporates as well that are working to issue. It's just the whole process of issuance obviously starts with the framework itself, identifying the projects to finance, because of all the ramification involved, and ensuring that it's actually in line with the green bond principles. So that continues to be one of the challenges in the local environment on the supply side. But on the buy side, which is good news, all the bonds that have been issued have been massively oversubscribed. There's little or no secondary market trading because of all these buy-side interest in the domestic environment. Specifically, to address that, the NGX have gone into an MOU with Luxembourg Stock Exchange. That's the leading stock exchange in the world, around sustainability, just to promote cross-border listings and trading. Now we've seen Access Bank list on that platform, and there are a couple of initiatives that are working on as well. We're currently at the SEC just to establish a board called the Impact Board that will focus on the green, because we feel that we give it more visibility. So by and large, NGS continues to promote capacity, knowledge around this field, with the intention that obviously more corporates will begin to leverage that opportunity, like you pointed out, to finance almost all the things that they want to do, given the fact that the size of the domestic institutional investor base is about $30 billion, and they have an asset allocation of about 5% to help drive that. So there's a ready market. It's just to find the right instruments that qualify to issue. And that is where we are at the moment at the Nigerian Exchange Limited.
Thank you very much, Jude. Like you said, a lot has been going on. And maybe that pivots me to Zambia, where I know, for instance, that just like yourself, plenty has been or is being done or has been done. I remember visiting Zambia for the inaugural conference or workshop on green bonds back in 2018. So maybe I can go to Mutumboy here and ask the question, to what is the SEC doing to engage stakeholders and industry experts to promote green bonds issuance in Zambia?
Thank you, Olomide, my other brother from my other mother. And also just to thank the organizers for this forum, AfDB and your partners. So maybe just getting straight and picking it up, obviously, from Nigeria, it suffices for us to caveat all of that Zambia hasn't issued any green bonds yet. So it's quite a good choice of markets on the panel today. So you've got an extreme case of Nigeria on the one side that has, and then you've got a jurisdiction like ourselves that's yet to issue a green bond. But you're very right in the sense that the Securities and Exchange Commission has taken leadership in terms of really catalyzing the whole green agenda on how we transition the country. So we have right at the apex an aspiration of transitioning the country into a green growth country. And what has actually transpired with the new government that's been in office now just about 2 years is we basically have an entire ministry that's been created to assist us with this agenda. And since the onset of this ministry, we obviously were in the limelight as the commission that has taken the leadership in the financial sector, primarily also because we now have in place a guideline, a framework for issuing green bonds. It's been a very interesting journey, and you're right when you estimate our journey started right around 2018. The framework itself was developed in 2019, and since then, it is indeed a journey of engaging the different stakeholders, who would include the policymakers themselves, to firstly appreciate the need to incentivize for green issuances in the market. And after trying for about 3 years, we were very successful this year. We managed to get our first incentive in terms of taxes waived off on investments in green bonds. But what you realize is developing a green bonds market is actually more involving than basically the financial sector leaders or regulators taking leadership. And we are now at that point where we realize that we needed to literally have a national strategy that's agreed on the fundamentals that need to be put in place for us to harness these green investments. The beauty with a country like Zambia, when you look at it, is we're naturally green. So we are endowed to be sustainable. But sustainability in itself would require that it's harnessed so that you can create the investments in a manner that would be attractive to investors. That is what's keeping us busy. We have since managed to convince the policymakers, the leadership, to agree that this is a national strategy that would require buy-in all the way from the political level. And we are lucky, again, as I said, we have a green agenda transition as a country. And that makes our work a little easier, but it still is a challenge in terms of just having the general citizenry and the general investing public appreciate what green investments really are, and also the business holders, the potential green issuers, also appreciating the importance of doing business differently and developing our country differently. So in the middle of that discourse, what we've done is basically even to transition how we structure ourselves as a regulator. We have decided to literally have dedicated resources that are engaging with the various stakeholders, engaging with the marketplace to raise awareness and build capacity so that we can literally harness these green projects and basically package them into instruments that would then attract investment into the Zambian jurisdiction. Our aspiration is basically to position the country as a global green investment hub. Perhaps I can stop there for now, Olu.
Thank you very much, Matamboy. I appreciate that comeback there. Yeah, we've heard from the exchange, we've now heard from the regulator. Perhaps we can pivot to the investor, because clearly all of these structures are being put in place to attract investment. So perhaps I'll go to Ms. Constantine right now. As one who represents the investors' interests on the panel, how would you say climate change related regulation has influenced your investment decision-making process so far?
Thank you very much. Let me first say thank you to the organizers and to David, AfDB, specifically for inviting me to join this panel. I think for Kenya specifically, we as pension trustees have been very, very active and very much positioned ourselves to sit at the table together with other actors in promoting the green bonds. About 2015, a group of us pension trustees came together and formed a consortium, which we called the Kenya Pension Fund Investment Consortium. And the reason we came together as pension trustees is because we recognized that we wanted to make joint investments into infrastructure. We also noted that there was interest from pension trustees outside Kenya, for instance, from the US, from South Africa and other jurisdictions, to make investments in Kenya. And yet the pensions and pensioners and institutional investors in Kenya did not really have a mechanism through which to work together to make joint investment. Now, when the trustees made this decision, we were able to be invited to the table and we got a lot of support. David Ashek, I remember, was one of the first through AfDB to support us at the time. And it was a very interesting coming together of various stakeholders. The World Bank came on board, USAID came on board and continues to support KEPFIC even now. Financial sector deepening, the government itself, the National Nairobi Securities Exchange, and various other actors. It seemed to be coming together of stakeholders that it was clear that with the trustees coming on board and saying, yes, we want to play our part in promoting investment into infrastructure, we then were able to come up with a perfect scenario whereby we were able to really push, for instance, for the investment into the Akon Green Bond, which I believe is quite well known now. And it was actually oversubscribed for various reasons. But I think for me, it's the coming together of the various actors in the sector that enabled us to succeed in getting these pension trustees interested in this area. Now, in terms of the policy framework, I think it's really important for pension trustees that there is an enabling environment to make investments, primarily because pension trustees carry fiducial responsibility for the investment decisions that they make. Pension trustee will be very important to them to ensure that the investments they make are as zero risk as possible, and where possible then to have guarantees, in which case, for instance, for ACON, Guarantor was able to provide this guarantee, but also the returns that we are making for this particular investment were competitive. And I mentioned this primarily because it's very important for proponents of green bonds and any other green investments to recognize that these projects are operating within the environment of other competing potential investments, in which trustees have to make very tough decisions about where to make the next investment. My hope would be that as we continue to be exposed to more opportunities that are supportive of the green investments, that eventually we can come to a point where project promoters can be motivated by the fact that institutional investors are deliberately making a decision to invest in a green infrastructure, and hence motivate project promoters to actually have in mind the social benefit of their project, economic, gender, as well as other elements, and finally, of course, climate change. Because we now recognize that it's probably important that we invest our money where it makes a difference, especially for future generations. Thank you.
Just staying with that, before I go to my next panelist, I haven't benefited from being a member of the Green Bonds Capital Market Development Program in Kenya for the best part of 3-4 years, driving that and succeeding with the issuance of ACON, and the level of investor engagement and awareness that was created in partnership with Climate Bonds Initiative and FSD Africa amongst the local, as you said, KBA and NSC and the likes. What else would you say, needs, what other efforts would you say is required to raise awareness of the benefits of green bonds to investors, whether it's educational programs or incentives that would, just drive that market? Because it just seems that, we've had the ACON and then nothing else. How can we increase that? How can we increase that investor engagement so that we drive more monies into green finance in Kenya?
I think what I can give as an example, maybe just going back to the ACON project, to me was just the hard work that was put into making this investment happen. There was a lot of commitment, I think, from the project promoter themselves, but also the government did its part. Development sector partners did their part. Capacity building, I remember as trustees, we had several rounds of workshops, exposure visits to different countries, appreciating how they've done it, cross-learning between ourselves and other regions, and perhaps also having a true and genuine focus on what pension trustees want and what they're looking for, and also giving enough time for decisions to be made to make an investment. I have been pushing for pension trustees to be engaged with a project promoter at the beginning of designing that project. There is a tendency to develop a project, design it to fruition, and then present it to pension trustees and say, you have, 60 days or 90 days to make this investment, without recognizing that pensions actually have a different cycle. It takes 2 to 3 meetings, first of all, to present the concept, get the buy-in, another board meeting, and board meetings happen quarterly. You're not going to call special board meetings every time there's a project to be discussed and so on. I also believe that engaging with the capital markets and being able to come up with instruments that make it easy for trustees to make an investment is probably the way to go. So I think, yes, Econ have been the first one, but in Kenya, I know there are a few more lined up now, but there is also more knowledge now, more understanding of what it means to make a green investment. And I believe pension trustees are now ready and interested in proposals that are coming along. I've had seen of projects in energy, solar, agribusiness, and we are appraising all this at the moment.
Thank you very much. Well, so we've heard from the exchange, we've heard from the SEC, we've also heard from the investor. We've done a lot of work and we've thrown in a lot of efforts. And I know that the AfDB, the African Development Bank, has supported a number of markets. But maybe I'll bring in Mrs. Akane Sanoko at this point to just allude to some of the things that the AfDB has been doing to support the green bonds market. And perhaps some of that could be deployed collectively through the AFAC program. Akane.
Thank you, Olumide, and thank you to the organizers and the other panelists for this interesting discussion. And I'm very happy to share a little bit about what the African Development Bank has been doing to support the development of GSSS debt markets. So the way we've intervened in that space has evolved. It started off actually by having mainly an advocacy role supporting our regional member countries. Actually, we were part of Nigeria's Green Bond Advisory Group, transferring also our experience from the Treasury side as a green bond issuer, reviewing Nigeria's sovereign green bond framework. And we recognize that to really boost the development of this market, there was a need to intervene both upstream at the enabling environment level, supporting the appropriate regulation, legal environment, etc., the education and awareness of the key stakeholders of the market, from the regulators, stock exchanges, but also the market participants, issuers, investors, and the financial advisors, the brokers, etc., to also having interventions directly downstream, supporting transaction. And that's what we are doing now. Upstream, we are providing technical assistance through grants, mostly to key capital market stakeholders to support their regulatory reforms, putting in place green bond frameworks, trainings, etc. Examples could be something that we've done for the WAMU regional financial market, where we had a grant to the capital markets regulator, now IMF-UMOA, that also included commercial participants and the stock exchange. Through these grants, we provided training and awareness training on sustainable finance instruments, diagnostic of what were the opportunities, benefits of these type of instruments, and what could be the foundations for developing this instrument for the market. The World Bank piggybacked on that work and helped IMF-UMOA develop the green bond guidelines that were then used by the first corporate issuer. You were mentioning last time the Emergence Plaza green bond, but unfortunately there have not been more green bond issues since then in the market. And then on the downstream, at the downstream level, we've been intervening both to support sovereigns and corporates. On the sovereign side, what we're doing right now, because many of our regional member countries have difficulty accessing the Eurobond markets, to mobilize the huge financing volumes they need post-COVID-19 to boost the recovery. We've been providing partial credit guarantees using the strength of our balance sheet, our AAA, to credit enhance these GSSS issuances. So, for example, recently, Benin was able to mobilize 350 million euros from using an SDG debt issuance with 195 million euro partial credit guarantee from the African Development Fund, our concessional lending arm. We recently approved a similar transaction to support Côte d'Ivoire to do the same, and another transaction is for Egypt to help them tap for the first time the Chinese panda bond market using a green bond format. On the non-sovereign, on the corporate side, we've also been able to support our clients by acting as anchor investors in green bond issuances. An example would be when we participate in Netbank's green bond issue that was listed on the GSE, and this was a tier 2 debt instrument to a Basel III compliant tier 2 debt issuance. And we've seen a lot of appetite from financial institutions for this kind of intervention, including AfDB. But on the corporate side, we're not only acting as anchor investors in corporate issuances, we're also strengthening local financial intermediaries that can relay us, that can be more nimble, faster to invest or support green bond issuances. For example, we join the sponsors and funders of InfraCredit in Nigeria that can then provide guarantees, as was said by my colleagues earlier on the panel, to facilitate pension funds and local investors' investment into green bond issuances. Thank you.
Thank you very much. Before I go to the other guys, maybe I'll still stay with you for a second. I haven't obviously worked across the continent, and rightfully so. You know, some of the comments that have been made today, we've talked about Nigeria, we've talked about Kenya, we've talked about Côte d'Ivoire, where we've had some issues. And obviously outside South Africa, which clearly is a more developed market in itself. One of the challenges that, one of the main challenges that countries are having right now is obviously to do with the debt level, number one. The currency exchange rates for most countries is obviously plummeted, Ghana being one, Nigeria currently going through the same. So I guess the question I have, even for some of the smaller markets, would be, what is the AfDB doing to support the issuance of local currency bonds? I mean, we've had things like Benin, for instance, who raised $500 million out in Euro bonds a couple of years ago. And one of the things they were talking about is that the market wasn't deep enough for them to do that locally. And they could have raised that on the BRVM, for instance. I guess my question is, what is the AfDB doing to support local currency issuance in the markets in Africa?
And that's a very good question, Olumide. Thank you for that. Our approach has the same strategic approach, I'll say, as what I explained for supporting GSSS issuances. So upstream, we work a lot on the enabling environment, and we have within the Capital Markets Development Division a dedicated trust fund, the Capital Markets Development Trust Fund, that enables us to deploy grants to stock exchanges, regulators, market participants, etc., to push for these reforms. And the CMDTF works at 4 levels, at the regulatory environment level, at the market infrastructure level, at the product diversification level, and also to increase awareness and knowledge sharing. So an example of how we have a holistic approach to support the upstream work of my colleagues on this panel, for example, is what we are doing in the WAMU region. So we supported the AMF-UMOA, the regulator, to review the core regulatory text to upgrade them because they had not been reviewed since 1996, the creation of the market. On top of that, we're currently working with the DCBR, the Central Securities Depository and Settlement Bank, so that the DCBR can now put in place the first digital platform to manage primary market issuance, so that these issuances are more transparent, more attractive for investors. We are also working with the stock exchange, for instance, providing training and supporting them in the new product development. So that's a very holistic approach, and we're having the same approach in different regions. Right now, the Capital Markets Development Trust Fund focuses on West Africa, but we are looking to expand its footprint in different regions. And then obviously downstream, we are working on several types of transactions to support a new product development, to strengthen institutional investors and market participants. I gave the example of infracredit, which is one amongst many other. We invested, for example, in the African Local Currency Bond Fund that can then buy local currency corporate bond issuances at a smaller scale than us. Even on the sovereign side, we launched a long time ago the African Development Bond Fund that is managed by MCB now to boost secondary market liquidity of the local currency sovereign bonds for our regional member countries. Thank you.
Sorry, by MCB, you mean?
Mauritius Commercial Bank.
I just wanted to make sure that we're talking about the same bank. Thank you very much for that interjection. Very, very good. I think I'll thanks for shedding light on those two brilliant questions. Going back to Zambia before I return to Nigeria. As a regulator, what are the key? I mean, you've told us all the good things that you're doing and what your ambitions and your ambitions are in the market, and very admirable, obviously. But from a regulatory perspective, what would you say your key challenges are, the ones you're facing promoting green bonds? And, you know, if given the opportunity, I mean, the AfDB just told you all the good things that we're doing. And if we're going to leverage AFAC going forward, what would you say your plans for overcoming these challenges, and what sort of assistance would you require? That's to Motunboy.
Thank you for that question. And also thank you for the information that's just been given in terms of what the AfDB are doing. And basically, I would say that they're on the right path in terms of the support that countries and, of course, financial sector regulators would be in need of. I just mentioned earlier that with our case, we have sort of taken a coherent or coordinated strategy around even how we develop our green bonds market, because perhaps also the beauty of not being front runners is you can learn from what the earlier markets have done. And what you tend to notice is, for example, in the market like Kenya, the green bond, I think they've only had an issuance of one green bond a couple of years back. And basically, we haven't seen any other green bonds being issued. And we've asked the question as to what would be the reason behind that. And we have speculated around our own responses. But put simply, what we are trying to do is to literally be able to create a market that is continuous and that is very intertwined with how we do the national development. So for lack of a better term, we are of the considered view that our developmental agenda at national level ought to be so sustainable, and we ought to be so intentional in terms of harnessing the sustainability projects surround in each and every sector. And we've had to go with that strategy because the other thing that you realize when you're in a market like Zambia is also the ticket size of the type of green projects or in fact developmental projects that you get. So there's also the understanding that perhaps a strategy that works is one that puts together a lot of medium-sized projects or ventures. So with that sort of a massive strategy and coordinated approach, there's a lot of capacity building that is needed. There's a lot of technical assistance that we need. And this applies at the different levels of market participants. So with the financial sector regulators, and not just the securities or capital markets regulators, but our sister regulators, the banking and pensions and insurance regulators, there's a lot of knowledge gaps in terms of just appreciating how we can catalyze green markets and the transition into green economies. So that sort of assistance is definitely welcome. And also doing things like assessing where we are seated, so data. And I think I did see that in your slides, Olu, where data featured as an important aspects of how we transition and how we develop these grid markets. So for Zambia, we still have need for us to undertake grid mapping exercises, whether we start with the financial sector and then cut across the other sectors. What's important about having these exercises is we then get to understand better where we stand in terms of sustainability and how we've greened and where we stand in terms of greening. And then also it gives us data that allows us to plan more effectively how we improve and in fact achieve the objectives that we have. So we do see a lot of potential partnerships and collaborations with the institutions such as the AfDB in exercises such as that. But also when it comes to the market transactions themselves, the green instruments, unique, they're new. There's a lot of specialized features that come with issuing a green bond. For example, we spoke about the need for third-party opinions or certifications. It's all capacity that we still don't sit with in the markets, and we've heard how other markets have now localized that. So all that is equally what we would be looking to achieve in our market. And obviously supporting the transaction as I had been presented. So we do have currently, we wouldn't say that our pipeline is empty. We have some very interesting projects currently that sit in the market, especially in the energy sector when it comes to, say, solar projects. So again, institutions like the AfDB, with what I've heard, would do well to partner with us on those fronts, to be honest. We currently are seated with a few issuers who've approached the commission. They're very interested in issuing green bonds, but they want to be handheld. So those again are areas where we see support being needed.
We need a lot of support effectively. Thank you very much for that.
We do.
I would love to go to back to the Nigerian Stock Exchange Limited, but we're fast running out of time. This is a topic which obviously is very close to my heart and we can talk about for a long time. But let me pivot to some of the questions that are actually being asked by the audience on the platform. One thing I said earlier, and certainly becoming more prevalent, is legislation, regulations, and the need for more reporting, and some of the standards, the global standards, which obviously are guiding some of this thought and effectively shaping the direction of travel. One of the questions we have here is, it says TC, and this is from Bini Prabhakar, I hope I've pronounced your name properly. It says TCFD is now absorbed by ISSB and IFRS. So assuming AFAC will use ISSB, that's an assumption. ISB does not address double materiality. Is that something AFAC will address? And lastly, the EU's SFDR recently disclosed guidelines by EFRG. This man likes a lot of acronyms. I mean, it just assumes that we all know what it is, that we're not all, perhaps it would be good for you to elaborate sometime. But it says not only factor in doubling materiality, but also holistic than ISSB as the borders complete ESG. Since we're talking about AFAC, I would actually like to bring in Mr. David Ashabo at this point to allude or elaborate on what AFAC is likely to do or cover. David, question is yours.
Sorry, thanks, Olumide. I mean, I think the first thing, the direct answer to that question is that AFAC is not a standard setting body, right? So we are not going to be setting or applying standards. What we are going to be doing is helping stakeholders understand what these standards mean for them, right? And accompanying them. I think in the discussion, in the panel discussion, the one thing that has become clear, or a common theme through all the interventions I saw was, sustainable finance is a journey. You start and you progressively move up. So AFAC is actually going to be helping the African financial stakeholders on that journey, rather than being a standard setting body or dictating which standards that people should, that the stakeholders should apply. What I would say though about AFAC and the regulation is that part of the whole ethos of AFAC is that we hear a lot about the African financial sector not being interested in climate change, not being aware, or not actually doing anything. And I think the 100 or so participants on this call and the others who've participated in this webinar series would beg to differ. And part of the work that we want to do in AFAC is to ensure that there's an African voice in the international discussions about these standards, so that as the international bodies are setting these standards, we are thinking about how they would apply to Africa. What are the realities in Africa that would warrant or merit a different application? Because from a financial sector perspective, we've had and we still have issues before where there have been standards set in other areas that, quite frankly, are almost impossible to apply in the African context and then become a barrier to access to finance. And we don't want that to happen. So I know it's not a very sort of specific answer, but I'm hoping that helps. Thank you.
Thank you very much. I have a question here for Constantine. It says, do Kenyan pension invest in foreign countries, as in African countries? Could you give examples of infrastructure investment made so far in Kenya, for instance? And I think this gentleman is actually given his name. He works for IDB. This is Mustafa Glitcher, who works for IDFC Climate Facility based at the AfDB headquarters in Paris.
Yeah, thank you so much for that question. The Kenya pensions industry is quite well developed, and we are allowed to make investments outside Kenya. We design as pension trustees our investment policies, which allow for certain percentage of your pension to be invested in various categories. So for instance, we can invest up to 10% offshore. we can invest as well within East Africa, but primarily at the moment, especially with the green bonds, we are looking to Kenya. Two projects perhaps which would be interesting. One I've already spoken about, the ACON project, but the other one, which is a roads project, which was successfully fundraised, at least on the side of the pensions. We oversubscribed in what we're calling the Lot 3 roads project. It's, however, not quite closed, but we expect that it will be closed out soon. But what is important to note is that the pension sector oversubscribed in these two projects, actually. And the important reason why there was oversubscription by the pensions in these two infrastructure projects comes down to the design of these projects, which were very professionally presented. Number two, there was evidence of deep thought and understanding of what pension trustees look for in an investment. For instance, I recall for the ACON project, it was, I think, something like 200 basis points above government paper, which was what we are looking for. Because trustees are not going to make an investment as good as it is, as green as it is, if the returns are not going to be competitive. Because remember, the primary role of a trustee is to ensure returns for its clients and also to protect against risk. The other important requirements include risk protection. Remember, I talked about guarantor. They did provide guarantee on both these investments. I had a mention by one of the panelists about continuous capacity building. And I personally do not judge this sector very harshly. I'm actually quite excited that we did have our first two investments, because it's actually not easy making these investments, and we're really just at the beginning, at the learning stage. So I think with patience and with time, we will see more and more interesting projects coming through the pipeline. Sometimes what we have seen is, because also of the, should I say, borrowing by governments, it is very attractive to invest in traditional assets. So a lot more work needs to be done in enabling support for the alternative asset investment space. And I would support any initiative that will enable project promoters to get grants or any handholding they'll need, and also resources to be channeled towards the rest of the value chain to get more and more pension trustees and other institutional investors receive exposure into these particular fields. But remember, it has to be a commercially viable investment, and the green element is an underlying sort of benefit, but which I think with time we need to prioritize it and make it a key requirement for investment. You can imagine if the fund owners said, I will only make investments into projects that are environmentally friendly or that are climate resilient. The impact of that is that anybody designing a project will have to meet that particular requirement. So if we came up together, including development sector partners and government, have policies that are supportive of initiatives of that nature, then naturally project designers and promoters will have to comply. But bottom line is that the project has to be commercially viable.
Well, I guess that's something we need to look through promoting through AFAC. Maybe thank you very much for that response, by the way. Maybe I'll go, we're fast running out of time, so I'll take one more question and I'll just go to Akane. I have a Jan Disclair who says, for us compliance professionals, how can we get up to date?
Sorry, but Jan has his hand raised, so maybe you can go directly.
Okay, maybe you can ask the question himself.
Yeah. Jan, you can unmute yourself and ask your question.
Yes, thank you very much to all presenters and panelists for this excellent session. And Olamide, in fact, my question was how to get up to par as compliance professionals during this whole energy transition to climate friendly investments, like how can we get up to date and up to par to effectively assist African institutions and government to, one, put in place appropriate regulatory frameworks, and second, assist them with enforcement and appropriate controls. And my point here, and I think that AFAC has a role to play, as David actually described earlier, the role of AFAC. When I make the parallel with FATF, like when the standards on money laundering and anti-money laundering and terrorist financing were issued, I don't know how Africa has proactively approached those standards and how Africa Voice was actually present in those international forums. But I want to draw to all of you your attention that today, most of African countries are on the gray list of FATF, probably because the standards do not apply the proportionality principle, because obviously we cannot apply rules as they are in Africa when they are like suited or custom, or for larger economies. So proportionality needs to be applied. So this needs to be voiced earlier on to those international forums. David said that AFAC is, also to make sure that Africa Voice is present in those international forums. And also, we need to be very proactive in how we want to position Africa in terms of proportionality, in terms of implementation, so as to avoid, down the road to be again on gray list, because it has huge economic and financial impact on Africa, the fact that countries are on like the FATF gray list now. So we should make sure, seeing that experience, that all compliance professionals are also up to par in order to also play a role in that value chain to avoid what is going on with our countries being on the gray list of FATF, what is going on with FATF for the climate risk actions as well. Thank you. Sorry, I've been a bit long, but thank you.
So before I get David to take that question or that respond to that comment, which country are you speaking from? Jan?
Oh, I'm speaking from Senegal. I'm based in Senegal.
Based in Senegal, so you're within the WAMU region, yeah? Okay. Oh,
yes, but my compliance advisory firm works in all the WAMU countries, basically. And with the regulators as well, ECOWAS regulators.
Okay. D'accord. So David,
I'm Jan Declaire. Thank you.
David, do you want to respond to that? Please?
Yeah, I wanted to respond to that, and I think my response is really to thank Jan very much for bringing this up. I think he has made a very passionate plea for one of the things that we think that AFAC should be doing, as I said much earlier. And I think when it comes to comparing this with comparing climate regulation with the KYC issues and FATF and all that, the climate regulation is a bit more complex, right? Because, and there you're getting into really political discussions around what does a just transition mean? What does net zero mean? What may be sort of an acceptable, quote unquote, investment in Africa may not necessarily be acceptable for Europe. And I'm thinking particularly about the use of fossil fuels. So, and I think part of the idea of AFAC is to as I say, we want AFAC to be stakeholder owned and stakeholder led, because we as AfDB, as the bank, yes, we do a lot of advocacy around the need for a just transition. And really all that means is that this the climate issue or the necessary energy transition cannot be at the expense of Africa's development, right? And where AFAC can help and where it is important that the African financial sector gets behind AFAC is that it increases our legitimacy, and we are therefore able to advocate more forcefully than we are already doing for the regulations to take into account these needs. With respect to the how to work with compliance officers, Ian, we've done some work together in the past, and I'd be very happy to connect and discuss that offline. Thank you.
Thank you very much, David. I think we're fast running out of time, but just like Ian, I think David has left his email address on the chat section, making reference to Mustafa. I think he says IDFC is a club of 26 national development banks, which is Pan-African, cross from south to north and east to west. So I think also, Mustafa, if you can get in touch with David directly, we would love to use the IDFC on AFAC. Alan, I don't know if there are any more questions.
Actually, I don't know if times allow us to take one more, but there was one actually for yourself on the ESG. So if you can maybe go quickly on it. And
I think you wanted me to elaborate on ESG. So environmental, social, and governance frameworks are being developed to ensure that funds are applied to projects that create benefits for the environment, social, and climate. It says here, which entities or any issuer, be that commercial. So we've had commercial banks issue bonds. Nigeria was one of them. Access Bank, Bank Windhoek is another one in Namibia who's also issued a green bond, and there are many others obviously queuing up to do the same. And any other large issuer is able to issue for climatic benefits through the capital markets. I don't know if that answers your question. At this point, I shall defer back to either Alan or Marina to close the session. I would love to thank all my participants on the panel, Mutumbui Akane, Constantine, Jude who's dropped off. If you can come back and show your faces. I love to thank the organizers, Sandy, David, Marina, Alan, for your contribution and your assistance, and the institutions to whom you work with for giving us the opportunity to present this webinar. And most importantly, I would like to thank, at one point, I think we had 120 participants, but we still have 88 online. So I would like to thank you too for taking your time out to be with us this morning or this afternoon and share with us some of your experiences. Thank you very much. Over. Olumide Lala is my name.
Thank you very much, Olumide. I think all it's said and done here, at least for this webinar, much more to be done for the climate action in Africa. So thank you very much to Olumide. Thank you to all the panelists, and of course, thank you to all the participants. And please get in touch if you want to get more information on the African Finance Alliance on Climate Change. We posted David's contact into the chat, so do not hesitate to reach out. Thank you very much, and stay tuned for the next webinar of the series sometime in September. Thank you again, and have a nice afternoon. Take care.
Au revoir. Bye.